Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Tepper, retirement expert with Forbes Advisor, a trusted destination for unbiased personal finance advice, news, and reviews to discuss what a Biden win could mean for stocks and stimulus. Taylor, it's great to see you again. Welcome back to Trade Talks.
Thank you so much. This is great.
And Taylor, President Trump has spent a good part of his administration touting stock market returns and corporate tax cuts, which is great for those invested in the market and companies that already find loopholes in tax policy, but not so much for the people who have come to rely on stimulus checks to survive the COVID-19 economy. And because of that, we keep hearing about a K-shaped economy. What does that mean? And how is the lack of stimulus going to impact the economy longer term?
Right. So throughout this entire recession, you've heard a bunch of like letter shapes, like U's and V's recoveries. And I think the best way to think about it is a K-shaped recovery. So basically, people who can work from home, people with college degrees who basically kept their job, they are on the upward slope of the K. Like they have pretty much returned, maybe not emotionally, but financially to what happened beforehand. They're doing reasonably well. It's the people who are going on the downward slope of the K who are suffering. And so one of the big impacts from the big stimulus package that was passed in March was this huge $600 a week federal assistance for unemployment insurance. And so when that ran out in July, a lot of people who are not able to work now, like people who work in restaurants or tourism or theme parks, they're suffering. They have lost their jobs, they're working reduced hours. They're not able to get back to where their lives were before. And for the past few months, they've been dipping into savings that they were able to do before and are starting to run out of money. So the inability to pass a stimulus has been really, really difficult on those people who are really at a pivotal point here. Once, eviction moratoriums go out the window, a lot of people will be, haven't been able to pay rent. They're gonna be forced to pay rent. It's gonna be a lot of bad situations going on unless there is some sort of stimulus from the federal government, or we have, hopefully a COVID cure. But absent that, they're going to need a lot more money because it looks like, more states are shutting down, especially in the upper Northwest or Northeast and or Midwest, excuse me. And so they're not able to get out there and earn a paycheck. So it's for those people who haven't been able to work, they're going to need the federal assistance. They're not getting it. They're in trouble.
Right. And even if they have to wait till after the election, regardless of who sits in the White House, and they're going to have to wait till January, February. And I can't imagine having to go through a couple more months in the winter and being worried about, your eviction status in January. You also noted in a recent piece that stalled stimulus negotiations and hazy policy prescriptions for a second Trump administration have investors and analysts considering what life might be like with a Biden White House and Democratic Party controlled Congress. If Trump has been good to Wall Street and corporates, why the shift?
Yeah, no, I feel like if you're President Trump right now, you're like, what do I got to do for you guys? You got this big corporate tax cut, and now you're bailing on me. Like what I said before, Wall Street wants more stimulus. Wall Street was able to regain a lot of their losses and actually hit new highs in the fall because people kept spending money. Because people who even when they lost their jobs, they were getting this federal assistance. They were actually taking home more than they were before. They were getting these weekly consistent paychecks, able to spend, able to plan. And right now, with that out the window, companies are worried that people aren't spending money, and my spending is your income. So if I'm not spending any money because my savings are going down, unemployment's a shell of what it was before, corporations are going to earn less money. It's going to be bad for them. So Wall Street wants more stimulus. The only way they're going to get more stimulus, or the easiest way they're going to get more stimulus now, is if Democrats are in complete control of the government. That is sort of the thinking on the Wall Street that or analysts or experts, that if that happens, then it's more likely that a big stimulus package will happen really, really quickly. If it's divided government, if it's Biden in control, but the Senate's still owned by Republicans, then it's going to take a lot longer. It's going to be a lot more negotiations, and the stimulus itself will probably be smaller. So that's why Wall Street is sort of hoping, I think, for a quick Biden victory.
It's always a tricky question when I ask analysts and strategists what could happen to stocks if there was a one-party sweep. From what you're saying, it sounds like it would be bullish for stocks, but I mean, the market, every time it seems as if there's a crowd, herd mentality, it always throws in some surprises.
Right, and I should You're 100% right. And what I'm talking about right now is more of a short-term thing. So Wall Street is looking for that like easy $2 trillion being flown into the economy. That's sort of what they're looking for. For normal investors, for people who are, you know, putting away a little bit of money each paycheck into 401ks, don't let the election interfere with your investing. Like keep those two brains separate. You know, you cannot do this. You cannot, you know, it's very, very hard to sort of predict the market, especially if we're talking about presidential politics and what that means. I mean, 4 years ago, everyone was talking about how Trump was going to build a wall and big companies that supplied cement were going to go gangbusters. Like a lot of stuff changes. It's really easy to sort of spin narratives out. So normal people should just keep what they're doing no matter who wins.
Yeah, I mean, think about it. When we saw the Dow down, almost 900 points on the overnight, right? When Trump got elected, and look at what he did by the end of the trading session. If he would have sold out then, afraid to, you know, stay invested, that could, you know, that was a generational opportunity, what's happened over the past 4 years. So exactly. So I want to wrap up here. You have a lot of great one-liners in the content that you write, and you have one that says, economic forecasting makes astrology look good. What do you mean by that?
Yes, no, I'm susceptible to flattery, but I think that what that means is basically like, look, you're going to read a lot of things by fancy money people who work on Wall Street and have titles, and they will, you know, they're going to write a report, and some news organization is going to write up the report, and it's going to say, because Biden won and he likes, you know, environmentalism, that's going to be good for wind turbine manufacturers. And you're sitting there in, you know, middle America, and you're like, oh, maybe I'll buy some wind turbine manufacturing stock. I would not do that. When you get down that sort of narrow of a road, try and catch yourself. Like that is a recipe for disaster. It's very easy to spin out scenarios where individual companies or individual sectors are going to do worse or do better depending on who is in charge. You know, gun manufacturers did really well during Obama, even though everyone was like, Obama's going to take away your guns. Like this type of stuff has a little bit of counterintuitiveness to it. So that's why you need to, you know, buy and hold, do boring things. Don't try and time the market. Don't try and game the market. Just sort of realize your humility in it all.
All right, Taylor, great advice as always. Thanks for joining us on Trade Talks.
Thank you so much. It's been great.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.